A warm welcome to you, my dear children. We are at the bank reconciliation lesson, finding the reasons for the difference in the balances, final balances of our bank account and in the bank statement. We are trying to trace out the differences in the final balances. Okay, final balances means the balance carried down of our bank account and the balance carried down, or the final balance of the bank statement. We are trying to trace out the difference, and we are trying to discover or find what can be the reasons, what could have been the reasons for that difference in the balances. All right. So as your topic here, as the topic reads out, let's find out trace out the difference in between the final balances. Let's trace out the difference in the final balances. What final? Where are we looking at now? Where should we look at to see these final balances? And what balances are these final balances? Well, children, you have to refer to our previous session. Of course, the students who are getting together with me for the first time to watch this session, if they are wondering what final balances are we talking about, what is referring to, what is the final balance this is talking about, if you are wondering what final balances and where are we looking at to find these balances, where should we look at, then children, you must refer to the previous session. In the previous session, we talked about the bank statement. In those sessions we have done before the previous session, we prepared the business bank account, several bank accounts. Well, some call it the bank account, some call it the bank book. It doesn't matter. It is prepared by the bank. Bank book is prepared by the bank, recording or entering all the transactions related to the bank current account, all the check receivings, all the check issuings, all the cash deposits in the current account, and cash withdrawals from the current account, including all the transactions related to the bank current account. We prepare the bank book or the bank account in the business. Not one, we prepared several bank accounts. Okay. Then we talked about the bank statement. The statement is a printed document sent from the bank. And I very clearly explained what this statement is. If you are still clueless, watch the previous session. The bank statement is sent by the bank. It is coming from the bank to every business or to every current account holder at the end of the month. Yes. To every current account holder, the bank sends this statement. They send these statements. Okay, and if you are a current account holder, if I am a current account holder, you and I and everybody else who has current accounts gets this statement at the end of each and every month. Then what is this statement? What is it? What is mentioned on the statement and why is it sent? Refer to the previous session. Okay, we talked about the bank statement. And I very clearly told you, children, explained to you that all the transactions which incur during the month, all the transactions which incur during the month are recorded by us, business, by the bookkeepers of the business, by us, in our bank account, same as that the bank also records all the transactions that we recorded in our bank account. They also record in the bank statement. Every single transaction that we recorded, they also record in that bank statement, and that bank statement only is sent to us at the end of the month. Okay, so when we say the difference between the final balances, when we say that there is a difference between the final balances, okay, I'm talking about this. When we say the difference, we must know that by saying the difference, we refer to the final balance of the bank account that we prepare in the business and the final balance of the bank statement that is sent to us by the bank. All right, I told you, children, in the video, I told you that most of the time, 80 times out of 100 or 8 times out of 10, these two balances differ. Yeah, okay. These two balances differ. The balance of the bank account and the balance of the bank statement. The balance of the bank account and the balance of the bank statement, they differ. All right. They differ. Okay, they differ. Not the same. That is when we get to prepare the bank reconciliation statement. All right. So all the drawings and all the underlining here is done. I did it just to get you to the right track. What we are doing now, you must be in line with me for us to continue. Okay. Right. So these are the differences. Difference number one, or reason number one. Here it says checks issued but not presented. Let's see. Yeah, that is the first reason. Okay. Checks issued but not presented to the bank for payment. That is the first reason. You want to find out what does this mean? If you want to find out what does it mean, you have to listen carefully. Okay? Listen carefully. Okay? Children, when we say checks issued but not presented to the bank. Okay, what it means is, well, you know that every check issued during the month, is recorded in our bank account, should be recorded in our bank account. Okay, regardless of the meaning, regardless of the reason, must be recorded in the bank account. Okay, got it? Because these are checks issued means our money goes out or the current account balance decreases. Yeah, we discussed about these things in the previous sessions. And when I say that, you know, when the current account balance decreases for the checks that we have issued, our current account or our bank account must be credited. The bank account must be credited. There should be a credit entry in the bank account. Okay. In our bank account, the check amount or the transaction amount value is credited. Okay. The debit entry could go to any other account depending on the reason. The transaction. If it is a check issued for let's say rent payment, rent account should be debited. If it is a check issued for a electricity bill, paying off an electricity bill, the electricity bill account should be debited. Okay. If it is a check issued for a creditor, to pay a creditor, bank account credit, and which account should be debited? Yeah, creditor's account should be debited. Likewise, the debit entry is not the problem here. The problem is the credit entry, which is in our bank account credit. Okay. Even though we credit the checks issued to our bank account, those people who take our checks, issued means we are giving checks now. Issuing means we are issuing checks. Got it? That's right. Those people who take the checks, they might not bring, or they might not go to the bank to get the cash. Fair enough. If they take all the checks that we issued to the bank, to their banks, and the money is transferred, the checks are encashed to them, if the checks are encashed, the bank account balance will decrease. Okay, the bank account balance will decrease. Then our bank account, our bank book entry which we made in the credit side is correct. It's correct because the bank balance has actually decreased. So then the credited entry represents decreasing of the balance. Then the balance has actually decreased now. If the person or the creditor actually took the money, actually encashed our check. But children, my dear students, if those parties, those creditors, those people who got our check did not actually take the check to the bank, if they did not encash the check, which means the bank account, our current account balance has not decreased. Okay, then the credit entry we made the credit entry. It decreased our bank book, or the credit entry has decreased the bank book balance, but not actually the bank account balance, or the actual money, the balance of the bank account. Did you get the picture? Got it? These checks which are not presented, these values which are not yet actually taken and cashed, this is the first reason for the difference in the final balances. Go through the text. When a business issues checks, they are credited to the bank account, our bank account, by us. Okay, it's correct. This gesture I'm always giving you for debits and credits. Okay, this gesture I'm always giving you. I'm giving this gesture for credits, and this hand I'm using for debits. Okay, so debited, and credited. Okay, debits and credits. So if our bank account is credited, that entry is correct. Yeah, they are credited to the bank account. That is what here they say, and it's correct. Then the balance of our bank account decreases. That's also correct. Okay. There are instances where some of these checks issued may have not been presented to the bank. Okay. Let's highlight that part. There are instances where some of these checks issued by the business may have not been presented. Is it clear now? To the bank for encashment. That is the case here. That is the reason. If these checks that we credited in our bank account are not being presented for encashment, which means our bank balance has not actually decreased. It has not decreased. It has not decreased because those checks are not encashed. Even at the end of the period. Okay. These are known as values or checks which are not presented. Unpresented checks. Okay. Checks issued but not presented, or unpresented checks. The last sentence. Since the bank has not paid for these checks, they are not recorded as payments in the bank statement. So in the bank statement, they are not recorded. If the checks are not gone, if the checks are not brought or presented to the bank, they don't know. The bank people, they don't know that we have issued a check, even though we have credited. They don't know. The bank doesn't know. So those values are not recorded in the bank statement. Statement comes to us. We open the envelope, take out the statement, open the statement, and we see, some checks are not recorded. Why? Because those checks have not yet been presented. They haven't been presented to the bank by those parties, by anyone who took the check. They haven't taken the check to the bank. Okay. So our bank balance in our bank account has decreased because we credited our bank account. We credited our bank account. But in the bank statement, the value is not debited. Well, why are you looking at me like that? You look surprised. Yes, I said in the bank statement it is not debited. Why are you wondering why did I say that? Why did I say in the bank statement it is not debited? Are you wondering that? Well, it is credited. It is a credit entry. So in the bank statement also it should be credited. Yes, maybe this made a mistake. Well, it's a check issued, which means money, our bank balance decreases when when the amount is paid. Then just like our bank account is credited, the bank statement also should be credited. Then why did he say debited? It should be debited. Well, you've got to refer to the previous session. Children, in the bank statement, they record transactions in the opposite way to us. I explained it very well. In the bank, they record in the opposite way to the way we record. When we issue checks, considering that the bank money is decreased, we credit asset decrease credit. Okay. When we get checks, when we receive checks, we debit those checks because we get money. Okay, we get money, so bank balance increases, asset increases, debit. Asset decreases, credit. Bank does it in the opposite way. They debit issued checks and they credit received checks. Okay, we have done these things. Children, be mindful. Okay, you have to follow this lesson from the beginning, otherwise you get confused. And it is a definite question. I mean, it's a definite, these things are definitely coming in the examination on your paper. I'm not saying a full bank reconciliation will be there. Can be there. A full bank reconciliation question can be there. Right? There's a high possibility. Even though a full bank reconciliation, to prepare a bank reconciliation, likewise, even though that type of a question would not come, several more questions, even in the MCQ paper, definitely would come. Yep. So, important area. That's why we are taking one by one. What are we taking one by one? The reasons for the differences. Reasons for the differences in the final balance. Right? This is the first reason. Let's go to the second. Shall we? Right. This is the second. Just like the previous reason, children, this is also a similar one. This is also something which is related to checks. Okay. Now, in the previous one, what we discussed was checks which are issued. Checks which are issued. Okay. But in this one, We are talking about checks which are received, checks which we got, checks that we received. Yeah, okay. Deposited but not realized. What is that? Received checks which we have sent to the bank, which we have deposited in the bank account, but not yet taken or not yet added to our account. All right, we'll go through the text. Checks which are deposited but not realized. Okay. When received checks are deposited in the bank account of the business must be debited. Correct? Is it correct? Yeah, of course it's correct. When received checks are deposited in the bank. When received checks are deposited in the bank, our bank account must be debited. The business bank account must be debited. Yeah? Yeah, of course, yes. Of course, yes. When we receive checks from whatever the source, it doesn't matter. Let's say we received a check from a debtor. A debtor pays us by a check. Okay. Or let's say we received a check from sales for goods that we sold, to a customer. We sold goods to a customer. We sold goods to a customer. Stock. A large stock was sold to a customer. Let's say a company who is buying goods from our shop bought a large stock and they paid us with a check. Okay. We could get checks from sales. Likewise, when we sell goods, we could accept checks from sales. We could accept checks from our debtors. All the checks are kept in our cash till or the cash drawer. All the checks are collected, and at the end of the week or maybe after the end of the day, all the checks are sent to the bank to deposit. Likewise, when we send the checks for depositing, every value, every amount of those checks, every amount of those checks are debited in our bank account because we get money. Because the bank account gets the money. The bank account gets the money, gets the cash. The checks which are deposited must be debited. Okay? Must be debited. Yeah? Yeah, that's correct. Those checks which were deposited, which was sent to the bank, which were debited in our bank account, some of those checks might not be actually added. Maybe they haven't been added to our bank account. Maybe those checks are still in the queue. Can happen. Yes, it can happen. Those checks are known as deposited but not realized checks. Right? Deposited in the bank. Deposited in the bank account of the business. They are debited. They are debited. They are debited. Should be debited. But some of these checks that are deposited, maybe they are not realized at the end of the period. Okay. Do you know the meaning of not? They have not yet been realized. Do you know the meaning of they have not been realized? What is the meaning of not realized? My dear students, it's like this, the practical knowledge, the practical side of it. When checks are deposited in our current account, okay, the bank must get those monies. We say monies sometimes. Let's say cash. The bank must get the cash from that payer's account and transfer the money to our account. Okay. Let's say we received a check from, let's say we received a check from debtor Kasun, a check of rupees 40,000, check of rupees 40,000. A check of rupees 40,000. This check we deposited. In our bank account. We sent the check to be deposited. Children, these checks are taken to the account after verifying by the bank. And our checks are not the only checks that the bank receives. A bank branch receives hundreds of thousands of checks every day. That's why the checks can be still in the queue. Checks are not yet taken for verification. When that happens, it could take a few days for that check to be deposited, for that check to be actually deposited. Or let's say, for that check, for the bank to get the cash on behalf of that check from the payer's account and transfer the money to our account. It could take a few days. That's why I said it's the practical side of it. Okay. Then, even though we debited, as soon as we received the check, even though we debited our bank account, at the end of the period, after a few days have passed, maybe the end of the period, month end is close by. Let's say the month has ended. Still the money has not come to our account. Still the check has not been realized. Okay, very simply I'm explaining. When that happens, children, even though we have debited this check, this amount to our account, it has actually not been realized. It has actually not been added to our account. So our bank account balance increased, but the actual scenario, the actual situation is our bank balance has not actually increased. You got it? Even though our bank account balance, our bank account is debited and our bank balance has been increased in account, actual situation is not that. It has not yet increased because the money has not yet come. The check is yet to be realized. Got it? Well, I'm explaining like I'm explaining to lower grades. You must understand these, children. Okay? That is the scenario here. Realization of checks refers to the process that the amount mentioned in the check has been collected and added to the account in the bank. Collected and added to the account in the bank, our account. All right. Yeah, that's about it. These checks are called checks deposited but not realized. Now, in the previous slide, children, we talked about checks which are issued but not presented. We call them unpresented checks. We call them unpresented checks. Issued but not presented means unpresented. Here in this slide, now we just finished talking about checks which are deposited but not realized. These are called deposited but not realized. Deposited but not realized. These are called unrealized checks. Unrealized checks. Unrealized checks. You can use Z or S, it doesn't matter. Okay, get the word into your heads. Get the word into your heads and keep it in your minds. Unrealized checks. Got it? Okay. Both these unpresented checks and unrealized checks, unpresented checks and unpresented checks and unrealized checks, both these checks create a difference in the final balances, in between the final balance of our bank account and the final balance of the bank statement. That's what here it says. It would take a few days for the amount of the check to be collected and added to the balance of the current account. Therefore, it is possible that the bank has not recorded the value deposited in the bank statement, in the books of the bank, the bank statement, even at the end of the relevant time period, just like I explained. That's it. These checks are identified as checks deposited but not realized, unrealized. Therefore, checks deposited but not yet realized are not recorded as deposits in the bank statement. All right, children, 2 reasons. This is the second one. Let's find out the third reason, shall we? Third, direct remittances. Direct remittances. Direct remittances. What are direct remittances? Let's find out. Direct remittances. There are occasions when some customers deposit their dues, directly to the current account at the bank, which means our current account. Okay, a guy comes to our business, casual scene. A guy walks into our business and he says, hello. කොච්චර කාලෙකින්ද හම්බුනේ නේද? සෑහෙන කාලෙකින්. ඔව් මේ දවස්වල ටිකක් බිසි එළියට එන්නත් බෑනේ. A casual scenario, very common scenario these days. And we say, ඉතින් ඔව් yes. මොනවද බැලුවේ ඉතින් අද? He's a customer. He has come to purchase something. And he asks whatever he wants. Let's say he buys a large bulk of goods. He buys a large bulk of goods. The amount is 60,000. Amount is 60,000. A purchase of rupees 60,000. Yeah. A known customer, a known customer, a regular customer. And he has bought goods worth of 60,000. And he says, these days with the corona pandemic, we don't go out very often, but I came to you because I have been for so long coming to your shop, and we know each other. So I don't use cash these days, with the corona situation. And we say, as the shopkeeper or the owner of the shop, let's say I'm running a hardware shop, I could say, yeah, that's good, that's a good practice. We can do the transaction online. No? You can transfer the money into my account. That's okay. I'll give you my account number, transfer the money. Voila. It's a good method. It has been very, very common. It has been a very common practice in the past few months. Let's say in the past year. Yeah. Yes, children, yes. Online transactions. There has been a sudden increasing of online transactions. Yeah? Of course, yes. A sudden increasement of online transactions, online orders, online payments. Yeah. So this customer who came to our shop, he is also suggesting to do the payment online. We can say, okay, we can accept his payment. He is paying from his bank account directly to our bank account. Money is transferred using his phone, smartphone. There are bank apps in every phone now. Money can be transferred any amount. Yeah. These are called direct remittances, children. These are the direct remittances. There are occasions when some customers deposit their dues directly to the current account or directly to our bank account. Similarly, receivables such as rent, interest, dividends are sometimes directly remitted to the current account, directly transferred to the current account. Just like I explained by taking a practical example. When customers or other parties, when they request or when they ask permission from the business to transfer the money directly to the account by using online transfers, We accept those requests. To be honest with you, we should encourage those online transactions because it's safer. It's safer with this pandemic situation, right? These are called online transfers, online money transactions, depositing directly into our account. These are called direct remittances. Okay, direct remittances. These are known as direct remittances. A business realizes such direct remittances after the receipt of the bank statement. Sometimes, if the customer did not walk into your shop, or if the person did not meet you, he didn't meet you, you didn't meet him, I didn't meet this person, but he has done the transfer, I don't even know. That could happen. And he forgot to give me a call at least. And he forgot to tell me, your money I deposited in your bank. I deposited the money into your account. Right? He should say so. But he didn't. He didn't even call. So we don't know that an amount has been transferred to our bank account. Got it? At these type of occasions, in these type of situations, sometimes when we don't know that this amount, this person has transferred or this person has sent the money, when we don't know, we do not record. If we don't know, how can we record? Those values are not debited in our bank account. Not debited in our bank account. Yeah? Fair enough, right? Yeah. But since the bank account realized, the bank account received the money, the bank people, they enter these amounts, or they record these transactions in the bank statement. Then the bank statement balance is increased, but our bank account balance is not increased. That creates a difference in the final balances. Got it? That's what here the textbook has given. Such direct deposits have been recorded as receipts in the bank statement. They have not been recorded in the bank account of the business, our bank account. Not. Okay? Got it? Shall we move on? I'll do a very quick adjustment, completing this. And the money is transferred directly to the bank account. Direct deposits or direct remittances. Likewise, children, let's see what is the fourth one. It says standing orders. Yeah. What standing orders are? Well, this one I think sometimes most of you might know. Well, that's what I think. Do you know what standing orders are? Most of the time, children, people or students who are actively involved in any type of a business, it could be your father's business or your brothers or your cousins or whoever, if you are engaged in a business and if you take part in these activities, business activities, you know about checks, you know about how checks are received, how checks are issued, these things. Yeah, likewise, sometimes you have come across this word also. There's a possibility. Yeah, standing orders. But anyhow, I'm going to explain it to you. These are, children, orders which are given by us ourselves. Orders which are given by us. Let's say the business. If it is a sole proprietorship, the owner, I have given an order to the bank. These are orders given by the business or the current account holder to the bank to pay a certain amount on a certain date regularly. To pay a certain amount on a certain date of the month, let's say end of the month, but regularly. The payment should go every month on 30th. I have given this order to pay from my current account balance every month 30th. For what? It can be for various things. Like my like the business, let's say for the internet connection for the business. Let's say it could be for a rent of the business. It could be for insurance of the business. For any type of a payment. It could be for a satellite TV connection. There are various payments that should be done every month regularly. For those payments, you can set up a standing order. You can. And you don't have to fuss every month. You don't have to go to the bank and withdraw money from the bank, and you don't have to go to that place to pay the bill, stand in queues. Nothing should be, no fuzz. You set a standing order. Likewise. Okay. For types of payments that you must pay for expenses, you give the order to the bank. Right, to pay the money out of your current account balance. These are called standing orders, children. Standing orders refers to an order made to the bank in writing by the business to pay a certain regular amount, such as a repayment of a bank loan. Leasing installment, insurance premiums, and other similar payments. An order in writing given by the business or the current account holder to the bank to pay a certain amount regularly. Yeah, that's it. So these are standing orders. Business gets to know that this payment has been made every month after receiving the bank statement. Wow. Well, it's a surprise. I receive the bank statement, I open the envelope and I get the bank statement out I open it and I check the payment has been done by the bank. The statement says the payment has been done. Okay. After receiving the bank statement only, I get to know that payment has been done. Fine. It's very easy for me. But children, the problem here is I forgot to record it in my bank account credit. I forgot to record. I forgot to credit that payment because I didn't know. I forgot. I might not know. Yeah. I might not know. The business bookkeeper might not know. But the payment has been done by the bank. These type of instances are called payments on standing orders. The bank deducts or bank debits. Bank deducts. Bank debits. Remember, bank is deducting and they are debiting to the bank statement. When we deduct, when we issue checks, or when cash decreases from our account, we credit in our bank account. But in the bank statement, they debit, the bank debit. Never forget this. If you forget this, you're messed up. Okay, you're going to go wrong. The bank deducts or debits the current account after the payment of standing orders. Although the payment on standing order is although the payment on standing order have been deducted in the bank statement, these have not yet been credited in our bank account yet. Well, everybody, we are humans, right? We can't remember and pinpoint each and every single thing. Sometimes we tend to forget. Sometimes we don't record the standing order until the statement is received, until we get the statement from the bank. We don't record intentionally. In some businesses, with some bookkeepers, they don't record in some businesses intentionally. It's up to them. It's up to the bookkeeper. Okay, the bookkeeper can record the standing order on the day the standing order payment is made by keeping a reminder somewhere, or he can not record. He can just stay without recording the standing order and wait for the statement to come. When the statement comes, he can confirm that the standing order has been made, the payment has been made, and then can record. Anyhow, children, the point that you should take here is standing order payments, even though they are made, the payments are gone from our bank account, from the current account. The bank book which we prepare, in that, it's not recorded. So that makes a difference in the final balances. That's what you should realize here. We are talking about reasons for the difference in final balances. The reasons for the difference in final balances. Final balance of the bank book and the final balance of the bank statement. Reasons. Because they are different. Final reason? This one. Bank charges. Bank charges. Bank charges. Yeah. This was the fourth one. Payments on standing orders. This is the fifth reason. Bank charges. Checkbook charges. charges that a bank deducts from the current account for various services from the current account balance, otherwise from the bank account of the current account, otherwise from the bank current account, is known as bank charges. Well, you can see the text, it's in your textbook. The amount charged for the checkbooks issued by the bank to us, these charges are called bank charges. Okay. The business realizes these charges after the receipt of the banks. There's a small printing mistake here. The business realizes these charges after the receiving of the bank statement, just like the standing orders, children. After we receive the bank statement from the bank, when we get the bank statement through post, when we open the bank statement and when we look at the bank statement only, we realize, how about that, huh? Wow, they have deducted 400 from our account this month. Well, that is the expression usually. When bank charges are, mentioned in the bank statement, most of the time, it's like a little disappointing, This month also they have deducted 400. Various charges for this and that, and for stamp duty and postal charges and checkbook charges. Yeah, and the businessmen, they are like, wow, very expensive to have a current account, huh? They deduct so much for so many things. Yeah, the businessmen go like that. They are sometimes small scale businessmen, they are really worried about these bank charges. So after receiving the statement only, we get to know this much is deducted this month for charges. Then these charges have been debited in the bank statement. All right, debited, children, debited. Debited, okay, as payments. They have not been recorded in the bank account of the business. We don't know. We haven't been informed. The bank does not inform us. They don't, every time that they deduct something, they don't take a call from the bank and they don't inform the business. Like, so is this Mr. Ranasinghe? We are from the bank. We are deducting 400 for the checkbook that we issued. All right, Mr. Ranasinghe, I hope you don't mind. No, they don't do that. We get to know that these charges have been deducted from our account, from our account balance. We get to know only when we receive the bank statement. Then children, in our bank account, these charges have not been credited. So our bank balance is not deducted yet. But the statement balance has deducted. They have deducted. That creates another difference between the final balances. Fifth reason, bank charges. All right, children, these reasons or these points that we discussed today are the reasons for differences created in between the balances, the final balances. Reasons for the difference in the final balances of the business bank book and in the bank statement. The theory part, which is somewhat important, because from these things definitely there will be some MCQs, multiple choice questions in your first paper. I hope you understood all these things, children, and I hope to see you soon again in the next session, because we are going to wrap it up from here, from this point, and in the next session we will start the preparation of the bank reconciliation. We will start with a question. All right, an example question. So till then, do your work and be good. Do not forget these things, children, these theory parts of our lessons. I hope to see you soon in the next session. Thank you very much.